So before the market even opened, I saw we are under median on the 4 hour, and on top of that, we have a equal high, right? Or I guess not really a perfect equal high, but to me this was an equal high, right? It's a little slightly off, but this was kind of like an equal high because remember, so since this is a 4 hour chart, right? If you go down to a smaller time frame, so just keep this in mind, right? So at this point here, this is 7 o'clock. So at 6:30, oh sorry, right before 6:30, we're gonna go down to a smaller time frame, right? So keep in mind, so on that 4 hour, it was kind of like an equal high, right? So 4 hour, kind of like an equal high, and 4 hour under median, right? So that's the sentiment. We know that we're bearish, or sorry, the idea is bearish. So I know I'm supposed to be looking for bearish setups, right? So now pop of the 15, pop of the 5, going into the market open. What's the actual pattern here, right? Is there a pattern that I can take a put? Is there like a call setup? Because remember, just because the 4 hour is telling you it's bearish, it doesn't mean you can't catch the other side, right? So now if you look at before the market even opened, what's happening, right? So if you look at all of this, we know that we were in bullish divergence, right? On a smaller time frame, right? This is 4 a.m., 4:50, 5:40, 6:25, so 5 minutes before open, right? So this is what I was kind of looking at. So I know we had bullish divergence. Before the market even opened, I see that we're already breaking bullish divergence here, right? Now looking at the 15, is there bullish or bearish divergence again? And matter of fact, there was bearish divergence, right? So going into the open, I waited a little bit because there was a little bit of a rally, right? Because we hit 5 minute median, 5 minutes before the market opened. Right when the market opened, it rallied, right? It pushed. We made a new high because remember this is pre-market. We made a new high. We hit 758. Now the RSI came all the way up and basically retested the bullish divergence that it was in and then rejected. Remember, I didn't catch it right off the bat. I didn't take puts the moment it went up there. I waited uh I literally waited 5 minutes. So literally the next candle, right? Because I entered puts at 6:35. Right, so the first candle, this is the first 5 minute candle. This is the open. We came up, tested those highs, and then rejected. Now, if you're looking at the RSI, right, we know that we're in bearish divergence on the 4 hour, equal high 4 hour, 15 minute under median now, with an actual bearish divergence here, and rejecting 15 minute median, right? So that's every single confluence that I need to basically take a trade because now we rejected those highs, we rejected the previous bullish divergence, and then I entered my put. Right? Because remember when I entered my put, it didn't dump right off the rip, right off the bat, because it ended up bouncing a little bit. I was like, bro, what is this pop? Right? I entered the puts, I think it went down a little tiny bit, and then it ended up popping, and then rejected VWAP. Because now if you look at when it hit VWAP, RSI is dying dying off again, right? We broke trauma the next 5 minute candle, and I think we were up. Yeah, see, I said aggressive candles, and it was only up 10%, right? And then at 6:42, I ended up trimming because we hit my first key level, right? And I said, hope most of you guys were able to scan my entry because I was red when I took it, right? And then now, if you're looking at the actual 5 minute, we broke 5 minute median. We broke a 15 minute. Where I trimmed was based off of my level, and it was based off of an RSI level 2, so that's 2 and 2, so that's a perfect confirmation for a trim, right? And then now at this point, this is where I need like the move. Because remember, when the Bollingers are tight, we know that this is when you're supposed to look for a setup. And the moment they open, we know volatility is going to come in, right? So now at this point, when I did take that trim, 36.22, what ended up happening? So we broke once we ended up breaking 36.22. What happened with the Bollingers? Bollingers opened up, right? So it's giving it more volatility. If you're looking at the 15, Bollingers are opening up as well, right? So we ended up dumping, and I trimmed for 35% the first one, and then if you look at 643, I got that full dump to 583. What is that? 5. Oh, that's up here. Wait. Oh, that's up here. That's this one. And then 70%, 80%. I took my last trim at 80%. Oh, because I did have a meeting. So 80%, that's at 651. That is down here. So I'm gonna guess that's either this level or this level because I just redid my levels. And then I
I have
took
a,
profit at 7. Go ahead.
on that 645 candle with the big bullwick.
This
When
one.
stuff like that happens, yeah, the one to the right, yeah, that one. When stuff like that happens and I'm in it, how do you stay in the trade and not just cut?
Didn't get stopped out.
But you don't set your stops till the second trim, right? So,
Yeah. And on
so
top of that, it's still in that because if you look, so if you're looking at the actual chart, right? You're always gonna have a little bit of manipulation because you're either hitting stops for this is why like the opening moves are so aggressive because uh so if you think about it like if you're shorting and people are bullish in this market, people are gonna set their stops. And this is why when those stops hit, you get aggressive bounces. Or vice versa. If you're going long and people are shorting up here, you're gonna have aggressive like rejections and the next thing you know, back up. Is because there's aggressive like stops, right? So that for the opening moves, you're gonna get those aggressive moves, but you can see um, when it bounced back up. I mean, I didn't even get to see red, so they were always green to begin with. So I ended up holding through. So I got my first trim. It bounced back, hit trauma. And let me put this on 1 minute so you can see it. 630 over here, right here. Right. So actually, it wasn't even when it hit that level. It was up here early, so it bounced up. Oh, because this is the one I was saying like candles are aggressive. I think 645. Right? Is that the one? Yeah. See 640, and I said the candles are aggressive. Oh, it's all of this. 645. Oh yeah. I went down. So yeah, I went to my runners, and that's why I set my stop loss. Yeah,
okay.
that's the one. So remember, after my second trim, I normally would put my stop to break even, and I never hit. And then got the full drop, and then I closed the trade at 703. So that's all the way down here, and that was 227%. I mean, it went down a little bit farther, but it is what it is, right? Uh, but yeah, that's your perfect picture, like trade for the open. You had 4 hour telling you it's bearish. We had 15-minute bearish divergence. We already know we're under 15-minute median, so the two bigger time frames are already telling you we're a little bearish. Looking at the 5 minute, we already broke this bullish divergence that it was trading in all of pre-market, and then the market open. We had a massive push, rejected basically the bullish divergence that it was in, and then I entered, and then like I said, it didn't play right off the rip. It did a little bit of consolidating, as you can see on the 1 minute. Where is it? Right here, right? It was just fucking down, up, and then we finally got a push down, and then the cons were only up 10%, and then it did the flush, right? And then at 7:06, I switched to calls because let's see. 7:06. So now remember when our side's outside of the band, our side always comes back in, right? Eventually comes back in. So our side got back into the band, and now it broke above a 15, right? And then the bands are kind of flattening out at that point, right? And then I said I'm risking some profits because it is showing me that there is some sort of a bounce. Because if you look at the 5 came back into the band. And if you're looking at the 15, right, RSI is bouncing off of a 4-hour RSI level. And on top of that, it's trying to get back into the band as well. Right? So I took the trade at 706. That's around here, 705, and then within the next candle, and then it pumped. Right? 706, and then I got like 30%. And then I said no hard stop because it is a lot of position for me. And I said if it breaks 362, then we will close out the rest. And then it came back, retested 362. Actually, I'm gonna put that level down because I'm pretty sure that was a pre-market level. 362. Came back, retested it, and then I got the rip. Right? And then that was 55%, and then stopped out the rest, right? Got the dump. And then at 741, that's when I started taking calls. Because now, remember, so if RSI went back into the band on the 15 and then rejected, we made a new low. Right, we made a new low. RSI also created a new low. But now at 8 o'clock, wait, let me see. This is NASDAQ, and I'm going to switch over to SPY. 741, I ended up taking SPY calls. 741, right around here. All right, so 741, there is a little bit of bullish divergence, right? A little bit of bullish divergence, and we know that it is a little weak. That's why that was more of a lotto setup, because we see that price is coming down, but then we're also creating like these. Remember, this is a smaller time frame. This is a 5-minute. And then on top of that, the 15 is again outside of the band, but the bands are flat. So we know that the volatility is dying off for the downside. We know that there is a potential short here, but we know that the volatility is dying off. So took SPY calls, and I think it instantly just fucking pumped, and I got a trim. I think this is the trade I was talking about in voice chat too. We got a trim at 24%, and then it came all the way back down. I said it's break even, and then it went a little bit of red, and then if you took it, it would have had a better entry than I did. And then I said it's back at the trim level, and then I said if it breaks 589, we're gonna switch to puts because that would be the rest of the breakdown of this divergence, right? Because then you'd be invalidating this little small bullish divergence, and then if it broke 3007, then you're gonna get a dump. So we ended up holding SPY call. Oh, I ended up holding SPY calls, and then I took an SPX call at 754. So that's literally right before this candle here, because it hit this 589 level, and then we had a nice bounce, and it got back to that 606 level. I got to trim the SPX calls for 34%, and I said it's also trim level again for the SPY calls. And then came back and finally started dying off. And then this is when I was saying, like, we need to catch this drop, because the moment it breaks 589, we're gonna have a drop, right? And then that's the one when I started looking at the contracts, and then I think it broke it. And remember, we broke the actual 589 level, and we also broke this 3007. And remember, we're still outside of the bands at this point, so we know that there could be like a quick move down, right, on this 15-minute candle, because it's outside of the band. Remember, so when RSI is outside of the band, it typically just means that you're in a strong trend, but you do know that eventually it's going to get back into the band. So just keep that in mind. So outside of the band, we know the 15-minute is technically still in bearish divergence, and the 5-minute is breaking this 3007. So I ended up taking those SPX puts, and then it dropped. I got like a little over 30%. I was able to trim it, and then we bounced aggressively, right? I didn't even get to close my calls because I was trying to catch that drop. Because I remember I trimmed my calls already, so I was like, okay, if it breaks this, then I'm gonna catch this put. So I ended up going a little bit heavier on the puts because I knew I was gonna try and catch this drop, right?
When you have
Caught the drop. Good.
When you're in a put like that and you trimmed it for 30%, How do you know when to trim since there's no levels below what you entered at?
1 minute.
And you just wait for like
Remember, because
a
no, here, let me show you. Wait, this is spy. I was watching my 1 minute to take that trim. Where is it? Look, this is oh wait, that's 9:30. Here it is. Right. So we broke 30.07, and I took the put from that 589, and look what happened. Took the trim the moment it hit the bottom of the 1 minute band. Because this is a chase. This is an aggressive chase. Right?
yeah.
Because if this fully closed under, then I'm getting the full drop. But remember, the bands are flat. The bands are flat. So
Yeah.
we know that it's not going to be a full on drop. If the bands start opening up, then sure, then I can get the rest of the move down. Right. And then I trim for 30%, and then it bounced back up. Then I cut the rest of the puts for like negative 11%, but the trade was still profitable. And then my calls ended up going back in green because, like I said, I never got to close them to begin with. Because at that point, so you gotta keep in mind, since I held my calls, right, I had two sets of calls up here, right, and I'm chasing the put. I'm going heavy, a little bit heavy on the put because I'm trying to catch this drop, right. So the moment I trim those puts, that's when I'm supposed to look at my calls, right, because the put that I just trimmed should have covered a little bit more of the calls that I had because I already trimmed these calls at the 606, right, around this area here. So the rest of the remaining contracts that I had should have been covered from this big trim that I just took from this drop. So now once this thing popped back up and got back above this 589, I end up closing the puts, right? Because this is just an aggressive. Since we broke that 589, this should have just been an aggressive push down, and then I would have been able to take my next trim at that 566 and then take a loss on the rest of the remaining cons that I had on those spy calls. But since we aggressively bounced right back up, took the loss on the rest of the puts, right, the remaining that I had, and then the calls ended up coming back to life, and then I basically closed them for basically the same amount, basically the same exact percent from where I trimmed it, and then next thing you know, it fully played out, right? And ended up going like 100 something percent on both of those contracts, but I didn't even hold it towards then. And then and then during that time, 827, I ended up chasing IWM calls because it's the same exact move that I was trying to catch on those spy calls. Right, I ended up catching IWM at 827. Right here, 825. So literally within this candle. So now if you're looking at this actual chart, right, if this is the structure that I was holding in, and you're finally breaking out of the trend line, you're breaking a key level and a trend line. And now if you're looking at where I entered, we're breaking out of this 15-minute RSI level. And then if you're looking at my 15-minute level here, we're breaking out of a 4-hour, and you're breaking outside the band. So we know that there's going to be quick momentum there because buyers are technically in control right then and there. So I know that there's going to be, I don't know, but I know that there's a possible move towards that direction because buyers are in control right then and there. But I do know that our side does need to come back into the band eventually. So I know that's not going to be a full on, like, I'm going to hold a trade all day type of move, you know? So I ended up chasing it. IWM, I trimmed it for 16% at that 348, and I realized the IV on those cons were so high, so I realized that's why it was such a scam. And then at 834, I went into runners because, let me see, 834, right around here, RSI price made a new high, but RSI is starting to curl back into the band. So I think it was right around here. I took my last trim, and then I put my stop, and then I got stopped out of those. And then at 919, that's when I switch back to puts because now I'm looking for the rest of the breakdown. Right, that's around here. 919 is right here. So within this candle here. So now if you're looking at price, again, if I draw out the bullish divergence that it's in, right? If we push towards these highs and now we're rejecting, let's say off some magical level up here, and now the band's flattening out and RSI is starting to die out again, right? And now we're breaking 545 and now we're breaking trauma and we're breaking bullish divergence. And if you look at the 15, what's happening on the 15? The 15 is already back under 15-minute median. And I said I'm looking for the rest of the breakdown, right? So I took puts at 919. Let's see, 1 minute. Where is 919? Around here, right? So that's within this candle here, 919. So, and you literally see, oh my god, this is the one fucking JP called me. So I took the puts. I think I was a little tad early because it ended up bouncing. I think I was down like 20%. Didn't even average down. Literally, JP called me when I was literally about to add to my position, and then it instantly rejected, and I never got to add. But you can see at 920 ended up bouncing. Right around, where is it? Oh, this is Monday. Tuesday. Oh. Right. 919. So right around here. We remember. So my idea was already bearish because we already broke 15-minute median and we already broke this smaller bullish divergence and we were breaking trauma. So I entered a little prematurely because I didn't wait for the candle close. And as you saw, I was basically right on the position. I was down like 23, 24%. I forget. And I was about to add too, which is kind of crazy. But JP called me and I never got to add. And then I didn't really need to add because I ended up just fully dumping, right? So at 928, I ended up trimming for 31%. 31%. I think that was 5-minute median, right? So 5-minute median. And then I said IV is climbing. And then I went into runners at 931. So that was literally here at that 427 level. I think it was a little under it. 427. Oh, yeah. So I trimmed it at 65%. I think it did go a little under. I think my cons did go a little over 70%. But then we ended up getting stopped out, right? Because we had an aggressive push back up. Remember, today was just aggressive price action. So if you weren't using stops, today was a dangerous day not to. Then I got stopped out the rest. And then I closed my Chewy calls because that shit was a scam. 10:59, I ended up taking SPY puts again. 10:59, 55, 59. Oh, so that big area that we were consolidating for a long time, right? So now if you look at this actual chart, this is the one I was telling everyone like yes, this range is big and it's a little dangerous because like I said, it's a pretty big range up and down. And since price action kept chopping and basically if you're wrong with your timing, the cons are just basically getting eaten, right? So I took SPY puts at 10:59. I think they went down a little bit and then they ended up bouncing. And then I averaged down at 11:01. Got my average to 89 cents. And then it did the drop again. De-risk. And then at VWAP, I was telling everyone on voice chat, like, this is VWAP. We have to trim here. It's only fucking 16%. And then I said it's chop at 11:17. And then at 11:24, I think it made a new low. So keep in mind too. So the only reason why I was bearish at this point is because if you look at price action, right, we kept making these highs and kept projecting off of trauma. So remember, trauma is your indicator for the overall trend, right? So if this is a 15-minute, this is the trend. If you broke and close above it, then we go back in bull trend, right? So consolidation rejected multiple times off of this trauma. And now if you look at RSI, like I said, if this is your bigger bullish divergence and now we're trying to break bullish divergence, then I'm supposed to be catching the downside, right? So now we ended up breaking that bullish divergence, and then I grabbed the put, had it average down, came all the way back down to VWAP, and now at this point, I was saying on voice chat, like it is starting to look a little bit like a bull flag, right? You can see that this is the bearish divergence we were trading to on a smaller time frame. And at that point, we hit that 15-minute RSI level, which was that 46.42, and that was the bottom of that trend line. I said, I think this is all we're gonna get out of our puts because it's starting to look like a bull flag. I said we're gonna need a clean break here. If not, it's gonna bounce, right? And I was talking about that on voice chat as well. I said I'm gonna have to take my last trim here because this is 5-minute trauma, so that is down here at 11:29. 11:29, which is literally perfect, right? It was literally the bottom of the trend line. And then I ended up closing the rest at 11:35. Right, that's literally within this bounce here, because we got back above the 644 level. On top of that, there is that bottom trend line, right? And now, if you're looking at the actual divergence that it was holding, right? If we were trying to play this bearish divergence here, and now we're breaking that bearish divergence, right? So I ended up closing my puts, right? We only got a little bit out of it. It didn't really pay. At 11:37, I ended up grabbing an SPX call for the bull flag that I was talking about. Now, if you look at where I entered, so I took them at 11:37, right off the rip, bro. This shit just fucking squeezed. So 11:37, literally right the moment it hit 11:37, I grabbed the SPX call because we broke that smaller bearish. Where is it? That smaller bearish divergence that we were kind of stuck in. Right, and 11:37, I grabbed the call, and it just instantly fucking squeezed. Right, and that was the bull flag. So it went like 150% on those SPX calls, closed them, and then we just rejected out of nowhere, right? And then if you look at it, this is the one I was explaining earlier too. If you look at the range that we were stuck trading in, right? If I just put a rectangle here, and I put this back on this 5-minute, with that whole consolidation area, right? We know that we have always been in bearish divergence, right? Because remember, we broke the smaller bearish divergence. We got a nice pop, and then rejected. We went all the way up to the 664, rejected heavily, bounced heavily, rejected again in this area, came back down, bounced again, hit 664 again, and then rejected. So now we created a new bearish divergence, right? And now we're actually under 5-minute median again. And now if you're looking at this 15-minute chart, right, we never broke out of this equal high that it was in, even though we kept pushing for new highs. Right, every time we push for new highs, RSI never fully broke out on a bigger time frame. But on a smaller time frame, it might have looked like it made a new high, it broke median, right? And that was a quick setup on calls, rejected. And then like I said, this just fucking aggressive chop, because if you were able to catch like calls and puts within this whole range, that's a 14-point move on ES or SPX, and you probably would have been banking on both sides if you were able to catch them all. But we ended up not catching any of that stuff. And then at 12:25, that's when I started getting back into puts, because, like I said, that's the overall. Like I said, the box that we're trading in at 11:25. 12:25, we finally broke out of the range that we were stuck trading in. Right, so on top of that, that is the bigger overall bearish divergence. We rejected 5-minute median. We see that on the 15-minute, we rejected off of 4-hour, and now we're finally breaking out of the range that it was stuck in. Right, so at 12:25, I ended up catching another set of puts because, like I said, this is the range we were stuck in. And on top of that, like I said, we never broke out of the divergence that it was stuck trading in, and then we just rode the rest of the wave. So 1225, I took a set of puts. I don't know if anyone else did, but we broke a key 15 minute. We broke out of this, like I said, the box that I was trading in, and then 1225. I think I trimmed at 12 a little. I think it was 1230. Oh no, I ended up closing everything at like 1230. Yeah, 1229. I closed it because we hit 15-minute median, and that was this big drop, and that was like 70 something percent. And I ended up closing, and then next thing you know, right before the market closes, it fully drops, and that was the full rest of the drop. But I didn't want to close. I didn't want to hold on to it because the market was coming towards a close. And 1245. Oh, that's it. Oh, and then on top of that too, um, I ended up catching a short myself off of this 545 breakdown, and then right before the market even closed, I told everyone on voice chat that I'm going to swing a long, because same thing like I explained with this box. If you look at right before the market fully closed, which is 2 o'clock my time, we're stuck trading in this box again, and there was a level here that I had at the time, and I swung, ended up swinging a Nasdaq long, and I said the only reason I'm swinging it, I said it's a little bit risky because it is still technically bearish, but since it is trading in like this little small box and the RSI is basically consolidating, and the Bollinger Bands are kind of like um, basically dying out, right? Swung the Nasdaq long, and then market reopened, and we got basically 100 points out of it. And then, as you guys heard earlier, I got my price target that I wanted because I think this was a pre-market low level that I had here at this 583. And then that's where I took my last trim, and I'm pretty sure I got stopped out by now. Oh shit, I don't have a stop on it. What the fuck? Alright, never mind. I'm just gonna close it. Wow, I thought I had a stop on it. Alright,
On a
whatever.
short you
But,
had?
huh?
You're saying you thought you had to stop on that short?
No, my long. I had a long from here.
Oh,
I just ended up closing it for a small profit. Fuck, I thought I had a stop on it. Oh, it's okay. But I did get my last trim at that 583, and that's what I was saying. If you look at pre and chat, if you kind of scroll up, I said these are my targets that I had in mind for the long. And I like circled it too. It was 5. Oh yeah, see, if you scroll up on pre and chat, I said 583, and if it breaks it, then we're gonna aim for 633. So and then you can see here it hit 583, and then we never got to that 633, and then I ended up just closing the rest. But that is pretty much it. Bigger picture, still technically bearish, right? We can see that the 4 hour is still under median. We do know that there is a little bit of bullish divergence on the 4 hour starting to form, right? Because we keep trying to make new lows, but your RSI is starting to climb, right? So now potentially this is where you would put on the 15-minute chart, and you would look for a set of longs, right? You'd look for a proper bullish divergence with a proper either double bottom or falling wedge, and then you would play out your chart and probably be able to catch another set of longs. And then if it actually breaks the actual 4 hour bullish divergence that it's kind of trading in, then that's the rest of your drop, right? See that there? Oh shit, it's like literally right on it. But yeah, that is kind of how we traded all day today, and this market was pretty crazy, and it paid really, really well. It was definitely a little bit scary if you're trading futures, because if you're wrong with your timing, you're probably getting fucked, because that was aggressive swings to the up and downside.
yeah.
But luckily
Yeah.
for options, Ivy was a lot higher, so Ivy was kind of coming in clutch. and saving positions. And yeah, every position we took today just fucking printed. Um, yeah, I don't know what else to say.
Appreciate the breakdown, dude. That was
A lot.
yeah, it was super helpful.
It's a lot. That's all I can say. It's a lot of information, and this is why I always tell you guys like it's all kind of repetition. Because like I can explain it to you right now, and once the market's open, you're probably gonna be lost because RSI is all over the place, right?
Yeah.
This is why like I always say like when we catch like a move, right? When we catch like a big banger, like pay attention to what RSI is doing at that very moment because once the candle closes, like you'll be like, oh, RSI, how come RSI like closed here when at the time it could have been down here, right? So like pay attention to like how the RSI reacts at like certain levels. This is why I said like when you draw your RSI levels, um, it's good to see it like happen live because you get to see the RSI push towards those RSI levels, and then let's say for example like this drop here, right? Uh, this massive drop, right? This big drop. And then let's say, for example, this RSI here, uh, this level here, right? So with this massive drop on price, like pay attention to where RSI gets to, right? Maybe this RSI level's wrong, right? Let's say the RSI is a little bit lower. Maybe it could have been like, I don't know, maybe like a point under. Maybe it's 26, 29. I don't know, right? So pay attention to like those type of things when you get a massive pop or a massive drop, and then just like make like a mental note where that RSI gets to, and then if it like heavily rejects or heavily pops from that point, right, from a big move up or big move down, mark that RSI level because like I said, that's where. So like I said, for this drop, and RSI like drops, and the next thing you know, you get a massive push. You want to know where that happens because next time that happens, like next time around when price gets down there, or sorry, RSI gets down there, you know historically that there's going to be a massive flow of orders because on top of that you got to realize that the market isn't just retail, it's a lot of bot trading. There's a lot of banks that use algos to trade for them, right? Because they can't just fully manage the positions themselves. They use algos, they use bots. um, a lot of whales, they just use market orders off of specific areas that they want to create, right? So when price action pulls you down towards a let's say like this is a level. Let's just say I mark this level, right? And RSI comes all the way down to whatever it is with this price, right? And then next thing you know, price pushes all the way back up. You want to know where that RSI went to, and that's a RSI level you want to mark down because next time around, when it gets to that 27.29, for example, right? Next time that comes around, that might be another trade in itself because historically you know that last time it hit 27.29, a massive push of buyers came in. So like say for example, if you're in a short right now, right, let's say you had the top of this short and then RSI is pushing all the way back down to 27.29, that gives you an idea, hey, maybe I close my shorts there, or maybe I take my last trim there because I know historically this 27.29 massive buyers came in and pushes back up, right? Remember, these are RSI levels, not off of actual chart levels, but uh, we're using RSI, right? Because it could have been since if price pushed us from 308 and that was 27.29, we don't know if that 27.29 is this 427, right? It might not be all the way down to 308. It might be that 427 or 362. So that's things to kind of consider. That's why it's important to have these key 4 hours because this will help you kind of gauge like your overall sentiment, and you can play a bigger picture move based off of it. But then using these 15-minute RSI levels, this helps you in the sense of trimming, and then knowing when you can take like a what do you call it, like a scalp to the opposite direction because you know historically that if that 27.29 comes in and the next thing you know you're looking at your 15, you're like, oh shit, RSI is hitting 39.69, so you have a 4 hour and a 15, And then next you know, you're looking at the chart, you're like, oh shit, there's a double bottom, or hey, there's a falling wedge, or hey, there's a pennant. What type of trade do you take then? You take a call or you take a long because you have a 4 hour, you have a 15 minute, and possibly a bullish pattern for it. And then on top of that, too, if you get to 27.29, right, and if you're looking at the RSI, the Bollinger is pointing downwards, right? So now I'm just giving a scenario, but if the Bollingers come like this and start flattening out, and RSI comes down here, and starts dying out at this 27.29. And historically, like I said, historically we know that 27.29 is such a area where buyers have shown to come in, right? And let's say, for example, this 427 level is hit. Oh shit! Actually, might do it right now. 1 second.
Yeah, I'll take this with you, bro.
Right. Let's say that 427 hits, and now we're at that 27.29, and you can see on the actual 15-minute chart, now we're at 39.69, right? And now if you look at the actual chart, oh my god, it's gonna fucking do it.
Are we taking longs when it hits?
I need to see. No, you don't, because the setup looks pretty bearish still. But this just a theoretical, like, no, because I mean, if you look at just look at the overall structure. Is there a setup to even take a long? Like, is there a pattern for you to take a call or a long?
Double
No,
bottom.
because no, there's no double bottom unless you're trying to force a double bottom, but there is no double bottom here.
Okay.
There's the overall bigger picture is still short because remember we're still looking at the 4 hour. Remember, right? So the 4 hour is breaking, right? And then we're at that 427. If that thing breaks, that's your big flush. Now if you're looking at this 5 minute, so like I said, so if you're in a short, this is where you decide to either close, right? You're right now you're at your 4 hour and you're at your 15 minute and you're basically right at your key level. This is where you would decide to close. And if you're willing to take a long, even though it's not fully set up yet, if you're willing to take a long just because there's a 4 hour bullish divergence, and on top of that you have a 4 hour and now you have 15, this is a risky setup, but this is theoretically where you would take a long. I'm not gonna take it because I don't really like the setup, and the band is not really flat yet for me to take it. But theoretically, this is where you would gamble along off of this level, and if it broke it, then this is where you would have to catch the rest of the drop, right? So now at this point, for me to want to take along, I would have wanted the bands to like flatten out, right? Our side's outside the band. We do know that our side does need to come back in, but you do need these bands to kind of tell you that volatility is dying, right? Because the volatility is giving it to the downside. When the bands are opening up, it's trying to give it volatility. Once the band's like flat, like I said, if it came to this 27.29, so like let's say right now, this 427, if it chops here and this 27.29 actually holds and the bands flatten out and we hold this 27.29, then I can consider taking a long if there's an actual kind of pattern for it, right? Um, yeah. But for me, this is not really a setup that I would like to take. But like I said, theoretically, this is where you would gamble along based off of that 427. It was 27.29, and on top of that, this is your 4 hour. And when the candle closes, that's kind of where it gives you the idea if you're to stay long or stay short. I guess the long would be up. I don't know. What would that be? Holy fuck. 20 points. I guess that's pretty good. Fuck. But yeah, there you go. I mean, you kind of see it. Like I said, it's not like a picture perfect setup, but like I said, that's where you would have taken along based off of your 4 hour bullish divergence if it held, and then 4 hour RSI level, and then 15-minute RSI level, and Jesus Christ, 28 points. And then if you did take a long, theoretically, you're supposed to trim. Shit, I probably would have trimmed already. 28 points. Fuck, can't complain about that. Theoretically, you're supposed to trim at this 36.22, right? Oh, looks like it's gonna hit it. And there it is. Now you're supposed to trim, right? Because this is your 15-minute. And on top of that, this is your potential upper trend line, right? And if you break out of it, looks like it's trying to break out.
If it break out, then that's a proper setup for a long.
Yeah, but it has to be a breaking close. And then on top of that, I mean, oh shit, that's 40 points. Yeah, I guess that'd be a good trade. What are we doing for Thanksgiving? Well, there you go. I mean, that's kind of it. You literally just saw a trade happen live. I mean, I didn't even take it, but
It played out exactly like you said.
yeah. Well, like I said, like for me to want to really would have taken that trade, unless I was really trying to take like a lotto, is would have been that. But like I said, a little bit more confirmation for me would have been, like I said, the band would have had to like flatten out, and then that would have made me a little bit more comfortable with like sizing wise, right? If I was already like really really green, then maybe I would have just gambled some profits on this one, because like I said, that's your 4 hour, that's your 15, and on top of that, that is your actual 4 hour bullish divergence that it is technically holding. Um, and yeah, what is that? That like would have been the fucking bottom. 46 points. Shit. That's a pretty damn good move.
Yeah, that's sick.
Well, you see it happen. I just explained it. And there you go. I literally said that's where you would close your shorts. That would have been the perfect close. Could have switched to longs. And boom. There you go.
That's fucking crazy that you just can do that.
Go. Repetition. All it is, man.
Yeah, I'm trying
You see
to
the setups over and over and over and over and over again. You're like, oh shit, I've seen this happen before.
put in the repetition, but I'm not trying to fucking go bankrupt while learning, you know? So it's hard. I saw
That's why I said like you don't have to take the trades every single time. Like if you really want to like practice, like look at Bitcoin. Like you could probably just chart Bitcoin uh any time of the day. Like you could literally be on like a lunch break, I don't know, on the shitter, I don't know, chart Bitcoin, and you're constantly gonna have divergence. So I will say like practice Bitcoin on a 1 in 5 and just pretend like it's a bigger time frame, because Bitcoin uh moves pretty aggressively, right? You're constantly getting like 400, 500 point moves, and just kind of, like I said, just pretend that it's like Nasdaq or SPY, whatever it is, but you're constantly gonna see divergences. Like look how many divergences there is day in day out on Bitcoin, right? You can catch a pretty decent move on Bitcoin. Like I said, just practice charting, practice reading divergences, and like I said, it's all repetition, because at the end of the day, the market repeats itself. No matter what ticker it is, it could be fucking Bitcoin, it could be IWM, it could be QQQ, it could be Meta, it could be Tesla, it could be Netflix. I don't know. All the same thing. At the end of the day, the only reason the market moves is because there's buyers and there's sellers. The only reason why RSI works so well is because there's buyers and there's sellers. The only reason why Bollinger works so well is because it measures volatility from those buyers and those sellers. The only reason VWAP works so well is because it's the volume weighted average price from the actual chart itself. The only reason why trauma works so well is because the value that we give trauma, it's using the past 34 candles on whatever time frame they're using it on. It grabs those past 34 candles and it's using higher highs, higher lows, lower highs. So it adapts with your actual chart. That's why everything that we use works so well. It's because it's all based off of historical data. Right? RSI, the market only moves because of buyers and sellers. So when you're using RSI, it's strength of the buyers and sellers. The Bollingers is showing you the volatility of the the of the strength of the buyers and the sellers within the past 34 candles that you give it, because we're using the values of 34 on our Bollinger, we're using the values of 34 on our trauma. So these two kind of go hand in hand, right? And it tells you, it doesn't tell you, but it shows you when volatility can step in, right? This is why we're able to kind of nail zero DTs most of the time, because we're not really taking trades when the bands are flat, right? Sorry, we're not looking for bigger moves when the bands are flat, right? When you look for like these bands when they tighten up like this, that's when we're looking for the big trade, because we know the moment the Bollingers open up, we're getting volatility, and the only way that zero DTEs work is you need volatility, right? So that's why most of the trades we try to catch is when the bands tighten. If the bands are flat and the volatility died for that direction, that means we're trying to catch a reversal, right? So if the bands are flat and we had a massive push to the downside, and the bands are flat and RSI is at the bottom of the band, then it gives you a little bit of risk to reward on calls or longs, because the volatility to the downside died out, right? Because when the bands are flat, it means the volatility is dying off. Once the bands start curling into each other, it means the volatility is starting to build up, and then once they expand, volatility is flooding in, right? So that's why they all work. They all work hand in hand, and this is how we were able to stay consistent in such a crazy market. The only times it's a little bit like confusing is Trump or some sort of data comes in and it's complete opposite of what the market is showing, right? Those are the only times, like uh not just Trump, but like, say like war, or I don't know, some CEO of some big company dies or whatever it is. Those are the only times like the market will kind of disregard um uh your indicators. But for the most part, if you're able to stay consistent in this sense, look, literally a trade we are just talking about literally would have been up 50 points. Shit, 50 points is massive. If this was like options 0 DT, 50 points is normally like an equivalent to like 70-80%. So, shit, 70-80% is fucking massive on an options contract. So, if you're taking a normal size, shit, I'm happy too. And if you go past that, shit, I'm all for it. You know? So, also keep in mind, now this position, right? Let's say we grab that long. We would have trimmed at the 36.22, and then I'm pretty sure this RSI was, I don't know if it did, but I'm gonna guess it was a little bit closer to that 45. I don't know, correct me if I'm wrong. But this 45.24 is where you're technically supposed to take your last trim, or at least go down to your runners, because your next key level is median, right? Because we're still technically in a bear trend, right? And if you're taking a caller along in bear trend, we know that the sellers are still going to want to step in. So your price target is always going to be median. And if you break it, then by all means, you're back in bull trend. You could catch another set of calls or another set of longs. And then your targets would be trauma. And then maybe you could follow your big weekly or daily levels, and you go from there. Rinse and repeat. Every day. Rinse and repeat. Same.
So you said you trim at that 36 and you trim at the 45 and be in runners. So technically, you don't always follow the 20%, 40%, 40%, 20%.
Oh, you're talking about trimming wise? No, this
Correct.
would have been the 20%, 40%, and then I'm trimming down to. Oh, I see what you're saying. I probably would have already trimmed at the trend line if I caught that bottom, right? Because remember, if we were trying to play off of a level and we're trying to play a trend line, I probably would have trimmed here already, because this is a trend line, right? Because we don't know for a fact that it's going to break the trend line. So that would have been my first trim, right? If this was an options, that probably would have been a first trim. And then once RSI got to that 36.22, that's a little bit a break above that trend line, right? So then that would have been my second trim, and then like I said, my runners would be
At
at
that
45 at that 45.24. If this was an option, and like I said, if this was an option, that's like 80% right off the bat.
right.
Because typically, like from what I've noticed, um, it's not always, but like it's normally like a 20. So whatever like however amount of points that you get on a contract, depending on the time, like if it's early in the morning, and let's say you're up 20%, oh sorry, 20 points on a long, your contracts are typically up about 40-50%. So it's like about like 30%. I guess you add like 30 or 40 on top of whatever amount of points that you're up, and then normally that's the amount percentage wise that you're up. If it's like later towards the end of the day and you're catching a big move, um, then the Greeks kind of go in your favor and it's kind of leveraged even higher. So if you're up 40 points, the cons might be up even 100% already because of time, right?
That makes sense.
But and there you go. That is how we would trade every day, day in, day out.
Appreciate you as always, bro.
Mhm. Like I said, I don't expect anyone to learn it right off the bat, easy peasy. But like I said, it's all repetition. I mean, you see a lot of people that kind of have been understanding the strategy. Like, handful of them have been a little bit successful. I mean, the people that are still learning, you are definitely taking a handful of, or not a handful, but you guys are taking a couple L's because you guys don't fully understand it. But once you start to fully understand it, it starts to click, starts to make a lot more sense, and you're able to stay a little bit more consistent. And then yeah, there's gonna be times when you're just gonna want to be a little bit of degen. You know, I mean, I do too. We're human. We tend to take gambles, even though the setup is not really there. You know, it's gonna happen. Um, as long as you can control yourself from spiraling, then by all means. And then, like I said, this is where you would take your last trim, right? 45.24, and then it's shy off a 15-minute median. So this is a valid trim because this is your 15. And if we're still technically under median, theoretically, this is where sellers will try and step in. So if there was level 2 tape right now, I'm pretty sure this is where walls are starting to set up. So that would be about, what is that? Off of that level, that is about 55 points. Not bad. Shit, I mean, that's not bad. That's good. 55 points is huge. Shit, what am I saying? That's not bad. That's good. That's really good.
Yeah,
And
it's
shit, yeah, 100 points sounds better, but like 55 points, that's solid trade. And how long is that? 20 minutes. 20 minutes for 55 points? You know how long it takes to even get 10 points sometimes in after hours trading?
yeah, that's
That's a
crazy.
really good trade, actually.
That's $1,000 per futures contract.
So, yeah. Crazy, crazy, crazy.
Sick, dude.
But like I said, it's easy for me to explain it. It's just like you gotta put the time in and kind of understand how these divergences work. It's important to know where your key RSI levels are at. And you literally saw me, like, I literally deleted all of this. And I literally just redid it. And yeah, I did it pretty quick and literally got the same exact RSI level back to the T. Um, and yeah, there we go from there. And like I said, like, sometimes your RSI levels are not going to be perfect, and that's where you're going to have to do a little bit of micro adjusting, and it's perfectly fine. But as long as you can, like I said, the main thing is like pay attention to like when you have a massive spike up and down, right? Where has RSI gone? And if it does a massive bounce, where did RSI actually bounce off of? Right? You want to pay attention to, if you don't have RSI levels, when you have a massive drop, you want to know where RSI actually went to. keep a mental note, and then if it actually bounces from there, mark that RSI level because that's going to be another like historical level.
So why would you not mark that like 17 level from the beginning of the day where that big bounce is?
Which one? This one?
Yeah, like look at the RSI.
Oh yeah, all the way down here.
Yeah.
Because these are my 15 minutes. So if I put this back on the 15, right? If that was the open, right? This is the open. We
Yeah.
dropped all the way down and we only got to 27. So now if you put this back on a 5 minute and you're past that, that's a no trade. You don't trade. This is a no trade zone. If you go past your 27.29, or sorry, if I go past my 27.29, I'm in a no trade zone. I'm not supposed to trade. Because now I don't have intraday levels. All I know is I have 4 hours that hasn't tapped, and until it gets to those 4 hours, you're not supposed to trade. You're supposed to just keep your hands off and then wait till RSI gets back into the band and gets back above the 15, and then you could potentially take another setup.
That makes sense.
Remember, because these are 15 minutes. These are 15-minute RSI levels. You need your 15-minute RSI levels to decide where to take a trade. Because if you're taking a trade down here, where are you going to trim? You're going to trim all the way up here. Do you know it's going to go all the way up there? You don't know. Right? Do you have RSI levels down here? We don't. But if you did, then maybe you might be able to trade it. But since I don't, I'm not supposed to trade. Right?
That makes
You're not supposed to trade at all the moment you break your key for 15s. And look at that trade that literally just happened right now, right? You literally would have just nailed the fucking top of target, right?
Yeah.
And now you're probably gonna get stopped out if it fully breaks down, right? That's literally like a perfect trim into your runners, right? Because at that point, if you get stopped out, you already made your profit. I mean, sure, it would have been nice to just fully close it, but we don't always know that it's gonna fully reject there. We don't know that it's gonna just hit that level then fully break out. We don't know that, right? So you want to at least reduce the possibilities um, of it rejecting. So that's why you would take majority of your profit at that point because you went from 27.29. Remember, this is a 15. You went from a 15 to another 15 to another 15. So you got to think about how much strength that the buyers took from here to all the way here, and you're still in bear territory. Right? Remember,
Yeah.
like I said, it's not fully confirmed until you can break back above median. And it was never fully confirmed. And that would have been literally a perfect trade. And at this point here, if it breaks 36.22 and you're watching it, you just take your full profit. Don't even let it go down to your break even. Because if it breaks this, it's going to just knife and make a new low because RSI is all the way up here. And if it breaks this key 15 and it breaks that 39.69, you're making new lows.
Yeah, and the band still hasn't even flattened. It's going down.
Mm-hmm. It's still opening. Crazy. But yeah, that's kind of how I trade every day.
Would you
And you can see we've been a little consistent with it. Huh?
Yeah, you're super consistent. Would you say that that's a H pattern on the 5 or is that not big enough?
I would say it's more of like a double top. Remember, that's kind of why I told you like I don't really like the call setup or the long setup. Remember, I told you I'm like I'm not gonna take it because the setup is risky. 427, but then as you saw, it was a 50-point bounce, so it would have been worth it. But on top of that, like I didn't really like the setup because it still technically looked bearish. All I see from this point is this, and if you look at the 4 hour, it is teetering already the the bullish divergence, and then on top of that, if you look, you already have kind of like an equal high, right? It's not the perfect equal high, but we can already see that once it broke back below this 37.63, that is your quote unquote equal high. So if I have a weak bearish divergence, and we're already testing bullish divergence, and we look at the chart and it looks bearish because of the whole structure in itself. If I take long, I know it's supposed to be a scalp. It's not supposed to be like a bigger move. And if it does end up becoming a bigger move, then I know that I can catch more because then the whole structure of this chart would flip bullish and you're breaking 5 minute median, you're breaking 15 minute median, then I know I can catch another set of calls or another set of longs because the whole thing would have flipped, right? And then on top of that, then we would have held this bullish divergence, and at that point, then we'd be breaking back above 37.81. If we break 5 minute trauma and break 5 minute median and 15 minute median, all of that would line up, and it would tell you that it's back in bull territory, and then that's
Squeeze.
another set of calls and another set of longs, and yeah, squeeze. Because now you have 4 hour bullish divergence, and then you'd be invalidating the weak bearish divergence that it was in to begin with, right? On this 37.54. And like I said, since we're in bear territory, that means buyers would want to step in and try to bring it back up, right?
Right.
So remember, it's always a game of tug of war with the market. The only way the market moves is someone's buying, someone's selling, someone's buying, someone's selling. it's not a one-sided thing. So yeah, no, that would have been a perfect trim into runners, and then like I said, you probably would have closed it before it even hits your stop, right? Because it broke under 15-minute support. And then, or if you weren't paying attention, you probably would have had your stop to break even, and now you're probably getting stopped out. And if it breaks 39.69, bye bye. Right?
Going through all your trades for today helps tremendously. But seeing it live, like you were just talking through it, is probably the most helpful thing I've seen so far.
Yeah, for sure. That's why I'm kind of glad that played out, because you guys got to see it live, because it's easy for me to explain. If anyone ever explains a trade like, oh, I took this because this, and this, it's easier said than done, because the market's already closed, the RSI's already done, the fucking candle already closed. It's easier said than done, but when you see this happen live, shit, makes sense. Makes perfect sense.
Yeah, it's fucking sick to see.
Yeah. Tomorrow I'm thinking about taking Meta. I'm glad I didn't take it today because freaking JP's friend is bullish on Meta. But I was looking at Meta yesterday, earlier today, and I was like, it does look like a nice setup. But I kind of don't want to risk it just yet.
What makes it a nice setup?
If you look at this daily, right, we're in a downtrend. We know that there is an upper trend line. We know that we have a bottom trend line. We know that today we kind of bounce off of the bottom trend line. Now, if you're looking at the actual daily RSI, like I said, remember I was explaining earlier, we're stuck trading in a channel on the Man, this is just the RSI. We're stuck trading in a channel on the RSI. Price is pushing us down, but RSI is stalling, right? So we know buyers are trying to step in now. If you're looking at the bands on the daily, it's starting to kind of flatten out. It doesn't look like it, but it is. It's starting to kind of flatten out because price is stalling. I'm sorry, not price. RSI is starting to stall because we keep creating new lows, but what is the RSI showing you? Right? If we're creating new lows, RSI should be down here.
Yeah.
Right? So that's why I was saying in voice chat earlier, Meta does look good for calls, but I'm gonna wait one more day because maybe tomorrow we get another drop, and then if it holds the bottom trend line and it's still in this daily, right, this daily divergence, then I'm gonna take a call, right? And on top of that, like I said, it is this channel.
When you highlight that box at the bottom of the RSI, how is it still valid with that giant peak at the top?
So if you look at the actual chart itself, right, we had a massive push down that's within this daily, right? Literally the next day, we're still within like this previous channel, like it hasn't broken out. But RSI, this is this is what you call a fake out. Whereas here, this is a fake out because price never got out of this channel. Right, it never broke these previous highs.
Okay.
Right, with this daily, RSI went all the way out here. Right, and the next, the next day, price started stalling, RSI started stalling, and now it's back in. So this is your fake out, and the only reason I'm making the peak here is because this is a high that it got to. So now, if I'm looking at the actual chart, right? If I just draw this all the way out, so now at this point, if I'm taking a call, I'm taking at the bottom of the band, or not bottom band, bottom of this kind of channel on this RSI 2395, right? And let's say it's still in this bottom trend line, and it's still in this kind of setup. I'm taking that call, and what am I targeting? I'm going to target that 617, right? And then at that point, RSI is probably going to be up here, which is that peak. And if it breaks it, what's that previous high? That's your next target. Would be um, this level right here, right? 642. So remember, RSI and price are not always going to follow because price can make new lows and RSI is still holding. So that's why you kind of want to wait for like a proper candlestick pattern. And at this point right now, it's not the greatest, but it is showing you that there is a setup coming. So either tomorrow it just gaps up and I fully miss it, right? Or sorry, not fully miss it. Either it just gaps up tomorrow and I just missed a great entry, or tomorrow it drops back down and it kind of tests this area down here again, and RSI is down here. Then I can test the call. If not, then it's either breaking out of this channel and RSI is probably above this 2839. Then I'm still taking the call because I know there's still room. There's still room now because then we'd be breaking this channel here, and then what would I be targeting? Now I'm going to be targeting this daily, which is at 31, because this is where we had a previous fake out, right? And
Makes
then
sense.
that RSI area would probably be the 642 level.
Okay. Yeah, that makes sense.
Yeah. Also another one, fucking Chewy. You can literally see. Wow, what the fuck happened to that drawing? Um, if you saw where I took Chewy, it was literally on this candle here, and I said it looks like a great setup because it has bullish divergence, which it did. Or sorry, which it does. It still has it. Uh, and so JP ended up taking it, and I got excited, and I ended up taking it with him, and it ended up it got stuck at that 33.92, and then it died. Right, I would think I was down like 50% of the cons, but I'm like, I'm not gonna average down because I didn't go heavy in this position to begin with. And someone asked me too. I want to say it's either this candle or this candle, one of these two candles here. And I said, someone asked me like, "Oh, would you average down here?" I'm like, "Well, if I was in a bigger position and I was really trying to save this position, technically this is where I would average down because this is the daily, um, daily bullish divergence, right? And it's still technically in the pattern because technically your, well, at least my stop would have been a break and close under this 3265 because at the end of the day, this is still in the same exact pattern, and we know that RSI is still climbing, even though yeah, price action is being wonky as fuck because there's no volume. But then next thing you know, price fucking pushed us up, and then whoever averaged down would have been green as shit. And then literally the next day, I was up on my calls. I didn't even have to average down. And then going today, or sorry, yesterday, it pushed even higher, but then my cons were starting to die out, and then today I ended up closing it, right? And but if it was like a 0 DT or like a closer dated strike, and I had a better time on it, or sorry, I entered a better entry on it, you could have seen like would have been could have been a banger, but at least I got to see it play out, right? I didn't average down. I mean, the trade did go pretty red, but like I said, it never invalidated the setup, right? We made that low, but our side was still in bullish divergence. And I said on voice chat, this is where you would theoretically average down if you really wanted to save the position. I didn't want to average down because I wasn't really heavy in the trade to begin with. And I told everyone like, if you want to average down, this is it. This is where you would average down. And it ended up becoming a perfect average down, and the trade ended up working. Let me try the RSI there. What's more important, the candle pattern or the volume? For me, it's so what matters to me is I need to see why I even took the trade to begin with, right? If I'm taking a trade and it's flat, right? So let's say, um, let's say I'm in a short and RSI is down here, right? We're under median and it's already short, right? It's already kind of dumping, but the bands are flat. That's telling me the volatility is dying, right? So that means whatever trade that I'm taking and the trade that's starting to go south, I have to take the loss for what it is. If the bands are tight and I'm wrong, I'm in the wrong, and it's still like a valid setup, that gives me the idea that I can still potentially average down and get the big move because the moment the bands open up, I'm getting the volatility that I need, right? So when I look for an actual setup, I need to see the bands tighten and I need to see my RSI levels. Like I said, it has to be a perfect picture 4 hour and a 15 minute on top of that with an actual pattern. Like if I get all of those confluences, that's my A+ setup, right?
So you don't even use.
Hmm?
You don't even use volume.
No, I don't care about volume because you gotta think about this, right? If you're a continuation trader, you pay attention to volume. If you're looking for like a bottom or a top type of trade, you're getting in before everyone. You gotta think about that, right? And
Right.
if you're trading like a stock, like let's say like what's a slow stock like I don't know what's a slow stock, Netflix for example. If you're trading like stock like Netflix, which is you can see like when before the split, it's been super slow because who the fuck is paying $1,000 for stock, right? You can see that Netflix was choppy, right? So before the split, right? So this is a split, but before all of that, if you looked at price, or not price, but option costs, it's just chop, right? Because it was so expensive, and like if you looked at like all of these pumps and dumps, like it's all small movements for an options contract, right? Fucking 1% move, and that's like half of the day for a 1% move. You wasted a lot of time trading. So if you're trading something like QQQ, SPY, something that has liquidity, I don't care about volume because I become the volume before everyone else. I get in before everyone else. If you're taking a continuation trade, then yes, you care about volume because you need volume for the rest of the continuation. But if I'm trying to catch a bottom or catch a top, I will become the volume. I will become I would get in before everyone else. You gotta think about that too, because if some like let's say like a whale for example, if a whale wants to get into I don't know $50 million worth of shorts, right? That whale is not gonna put $50 million right off the rip. Why? Because everyone else is gonna see that and they'll be like, oh look at this dumbass. I'm gonna take his liquidity, right? Everyone's gonna be like, hey guys, look, this guy just put in $50 million worth of shorts, but this thing still looks bullish. Let's push it. Let's squeeze them out. Right? You squeeze out that person, but then a proper will wouldn't put 50 million. They would put $1 million on a pop. Next thing you know, the next pop you're putting in a million or another 2 million until they get to their max. Let's say $50 million worth of shorts. Right? They would they have to put it in like every type of pop until they can catch until the big drop actually happens. Um, then that's when they get to play out their whole entire sentiment. So in that sense, right, if we're talking about volume, and if you're trying to be like a top or sorry, a bottom tick trader or a top tick trader, you need to become the volume before everyone else. Right? This is why we're able to catch the bottoms, we're able to catch the tops, is because people aren't paying attention to it. People are looking for the continuation. People are waiting for a lot more confirmations, right? People are not using Bollingers. People are using EMAs or MAs, for example, right? Either people are waiting for price to get to that MA or that EMA, right? And then they'll take a trade. But then next thing you know, someone else like us, I mean, we might be already in the trade and then we're trimming at the MA, right? So we're already in before all of the volume. And then once we get to that MA, then people this is what you want to see when price gets to like a moving average, right? For example, we get to trauma, right? So price gets to trauma, we want to see volume because we want to see continuation, right? If you're down here and you're getting it at the bottom of the band, you're in early before everyone else because by the time we get towards an MA, this is when people are going to start looking at the call, right? People are looking at the moving average and people are like, oh, okay, cool. Like this is, I want to catch continuation. So at that point, that's when volume starts coming in because people want to see the continuation of an actual breakout, right? So uh, I'm not saying that it's bad, but using like moving averages and all that stuff, you're late. You're late to the game unless you're really trading like if you put like a 9 and 21 crossover, right? Let's put 2 of these. Hide all of this. Put a 9, 21. Let's change this to white. Right? So for most traders that are using like moving averages, they want to see this. They want to see the break of a 9 and 21. So people are waiting for this type of move to catch a trade, right? Or vice versa, to catch this type of move for the downside. But if you look, if you're able to catch like the top of a trend line, or you're able to catch the breakout or the bottom of the trend line, and then if you're using, I mean, depending on whatever time frame that you're at, you're kind of able to catch the bottoms or you're able to catch the tops, and then once volume comes in, then you get the rest of the move with everyone else. You know, so for me, I don't care about volume because I care about volatility. I do not care. I do not pay attention to volume at all. The only times I look at volume like why is the chop happening, and then I'll be like, oh, it's because there's like no volume, right? But when I look at a trade, I'm looking at the Bollinger's. The Bollinger's is telling me volatility, because at the end of the day, we only care about volatility because we're trading zero DTEs. If you're trading futures, then by all means you don't really care about volatility because you're trying to catch the bigger move, and if it's a slow grind up, then that's what you get, right? You get a slow grind up. But if we're trading zero DTEs, we want volatility. We need to see a big move right off the bat. So this is why I care about the bands tightening up. And once the bands open up, that's your volatility. And when the bands open up, what's happening? That's your volume, because people are chasing. But then we would have caught the bottom because I don't know. I'm just saying theoretically. Let's say we caught the bottom, and the next thing you know, volatility steps in. Right, we're opening up on the bands, and next thing you know, everyone's chasing the call, and next thing you know, the chart's mooning. Right, so for me, I don't care about volume because I care about volatility. I care about the bands opening up, and I care about the bands tightening because I know that's where I'm supposed to look for my setup. And once the bands open up, volatility, and then at the end of the day, same thing. That's your volume, because the only way you get volatility is because you get volume. But we get in the trade before it all happens because we're already seeing the accumulation on the bands, because the bands are tightening up. We know that there's a setup already forming within that band. But yeah.
All right, that makes sense.
And that's literally what happened with the Nasdaq long we were talking about, right? If you look at when I was talking about, holy fuck,
I took it.
it ended up playing out.
I took it.
Remember, I was telling you guys earlier on this 15. Oh my god, I have fucking EMAs on. Let me delete this. I was telling you guys, this is where you theoretically would take a trade, right? When we hit that 427, is because the bands are tightening, right? And once the bands start opening up, well, actually not here, but you can see on the 15-minute, bands are curling, so we know there's a potential setup, right? And then once the moment the Bollingers open up, that's your volatility. So theoretically, if you took out, remember when we were talking about earlier on this 427, when it gave 50 points, we were in before everyone else because no one would have taken this trade. Like your EMA would have never gave you a setup for it, right? Or there was no proper pattern for it just yet, right? Remember, we literally, when I was talking to you guys earlier when we got to that 427, I said theoretically this is where you would take your NASDAQ long or NASDAQ or QQQ call, because 4 hour and 15 minute, right? That was at 427 level. And then I said you trim because you hit 36 and you hit the 45, and then your last target would have been median. And if it fully broken close above that on the 15 and the 5, you're back in the bull trend, right? On the smaller time frame. And on top of that, that was your 4 hour bullish divergence that we were talking about, right? But until that can happen, we're still technically in bear trend. But in this sense that we're talking about volatility, or sorry, volume, you literally would have been able to grab the bottom, because you would have never people that were trading off volume, you would have never seen that. You get in before everyone else. So, and that's kind of where I grabbed kind of that idea of how whales trade, is because they have to get in before everyone else. So if they're trying to short, they're already starting to short like the all-time highs, right? They're starting to build their positions for a big short. Or if they're bullish, they're buying on like massive dips, right? Even though it makes new lows, they're still buying, because at the end of the day, they can't just fill $50 million or $100 million, whatever the fuck it is. They can't just fill that entire position right then and there, because everyone else in the market is going to see that someone is putting a massive order right then and there. And on top of that, if sellers see that, hey, look at this buyer, just like I said, puts in $100 million, let's fucking squeeze them out of that position first. Let's drop the market, and then we'll fucking pump the market, right? So, smarter whales nowadays, they do not fill their positions right then and there. The only people that really do that is just the degenerates, or like, let's say some bank really wants to like get in a position, then everyone else sees that on a golden sweep, or fucking, what do you call it? Or it's just a, what do you call it?
Dark
fucking dark pool. Yeah, I can't believe I just fucking forgot about that. But but yeah, that's kind of how we read all of that. Holy shit, that shit rejected median nasty. No, this is both time frames. Also, with futures, since you don't have to worry about data and all that stuff, you can actually aim for like for this, for example, when I gave the long off of that 427, you could have aimed for that 5-minute median, right? So if this was a QQQ call, right? If you took that QQQ call for 427, this literally would have been perfect. I said this is where you trim 36.22, and then it hit 45.22, and that's your last trim, and then it dropped, right? We would have got stopped out on the rest of the position, and then since it ended up getting back above 36.22, and we ended up holding 427, now we have a smaller bullish divergence. That could have been another entry for another set of calls, and if you were just on futures, you could have just rode it up until median. This is why I don't trade futures and options at the same time anymore, because it was a little bit more distracting, and then next thing you know, I'm taking a loss on one or the other a little bit more than I should have, because I'm trying to trade both at the same time. I used to trade options and futures at the same time, but then I would get distracted with an options trade. Like say if the trade was going south and I had to average down, I might have forgotten to average down on a futures, or I might have forgotten average down on the option, or vice versa, whatever it is. It's just too distracting to trade both at the same time. So this is kind of why I kind of been focused more on option trading nowadays, because at the end of the day, my prop account is not the same as it used to be. The leverage is no longer the same. The rules are no longer the same, so I don't really focus too much on my futures. But in that sense, like I said, you get to play out the bigger setup that you're trying to catch on futures, because you're not getting data burn. So you get that, right?
Yeah, I do. Thanks.
Because you'd probably be trimming a lot faster on your options, because you're having to fight against data. But with futures, You don't have to worry about that, and you kind of get to play.
Yeah.
If you're
'Cause
taking
if-
along off the bottom of the band, you can always aim for median. You follow your trims, and then you can literally let that last runner get towards median, and then just like I said, you put your stop to break even, and then if it hits median, either you decide to take your close, or if you want to risk it, if it breaks out of it, then you get the rest of the move, and then you can close at the next, I don't know, 4 hour or the next 15. Or if there's like an overall bigger structure, right? If this is an actual double bottom, then maybe you're targeting 728 or 638, because at the end of the day, you're not getting data burned, so you have a lot more room to play with. But options,
that's also why like the first trim on options is so important as well, right? Because like
Yeah.
it gets rid of your risk when you're in the trade.
yeah. Well, for me,
Whereas, like,
it's the
futures,
risk.
if it
For the
ever-
risk for me, I have to take my second trim.
the
For
second
me,
trim. I mean,
the second trim is the most important to me, and then after that, by all means, sure. If it gets stopped out, then that's fine.
yeah.
How are those levels? Yeah. So these are like I said, these are my 4 hour and these are my 15. I kind of explained that multiple times earlier, so I'm kind of losing my voice, so might have to talk about that another time. But
Yeah, because
but yeah,
sometimes
I always explain this like almost every other day, so I would just say wait for the next time I explain this. But these are my key levels based off of this one's off of 4 hour and this one's off of 15.
yeah,
Yeah.
Appreciate you.
sometimes
Hmm?
with the options, sometimes we're like making new lows on the charts, but it's still at the same percentage as it was earlier.
Yeah.
Whereas like on futures, like point value is like point value, doesn't
Right.
like decrease or increase.
Yeah, exactly. That's why like futures a little bit more. I would say it's a little better, but at the same time, it's a little bad at the same time, just because
Yeah, no,
your
it's
losses can.
trade offs.
Yeah, there's definitely trade offs. Futures like your losses could be endless if you're not setting those stops, and at least with options, if you get a move right off the rip, you're getting a little bit of that IV ramp, and you're getting a little bit of those Greeks to kind of help you out. But if it chops, then you got data against you. But if it chops while you're in the futures, that shit don't matter because you just hold on to it. The annoying part is you're just watching your P&L go up and down, up and down. But then at the end of the day, like as long as it doesn't invalidate your setup, you can hold on to it as long as you want until you get to that level or until it invalidates. Then you close. But yeah, that is what we get.
Once it invalidates the range.
Yeah, exactly. What Burby said. The moment we invalidate or break out of a range or break down from a range, then that's when I redo my RSI levels. My levels kind of stay the same. Like the actual chart levels will stay the same. If anything, you're just adding based off of previous ranges that you're trading in, right? If you break under here, then I have to rechart, and I have to grab the next previous range, which should be all the way down here. But at the moment, don't need to chart all that. But until then, these are my levels for now, and we go off of it. And then, like I said, we line them up. We line them up with all our key RSI levels, and we play the patterns, and yeah. But that is that.
Appreciate you, bro.
Yes, sir. Hope that made sense. I mean, shit. We fucking went through all the trades. You guys got to see that 427 play out perfectly. That literally fucking bounced, I don't know, 50 points at the time. And if you were able to hold on to it, 64 points at the max. I mean, the trade is still there. So if you were still holding on to it, like I said, you break 5 and 15-minute median. What's going to happen? You're going to get a squeeze. And where would you add? On that break. And then where would you trim? Trauma. Right? And you break trauma, then you follow the rest of your levels. So, yeah. But that is that. Like I said, practice, like I would say practice with Bitcoin, because I think Bitcoin is pretty volatile. Literally, like whatever day it is. And like I said, I would say chart the 5 and the 1. Sorry, look at the divergences on the 5 and the 1, and just pretend like don't. I know it's a smaller time frame, but pretend that this is a 15, and pretend this is a 5, because on top of that, you can play out like those divergences, right? Just practice, just visualize how the RSI reacts with the band when the bands tighten, when they open up. Like make notes of all of that. And maybe next thing you know, maybe you're a Bitcoin trader. And the next thing you know, you're 200x leveraging, and next thing you know, you're catching bigger trades than Nasdaq. I don't know.
You're making 6 figures each trade.
And always the last thing will be like blowing the account.
Or you're blowing the account.
Yeah, no, liquidating on off of like a
Bro,
200 point
leverage
move
trading
only.
on Bitcoin is fucking scary. I can attest to that because I did a Mexi account. I started with 10,000. I liquidated that shit like blink of a fucking eye. 200x the Bitcoin trade because I thought it was gonna bounce. That shit fucking dumped. I went down like negative 1,000 something, and it went to margin. Had to fucking pay that, and that was like less than 5 minutes. um. And then I tried it again, and I made it all back plus some, and I quit because Bitcoin trading is not for me.
When
Because
you
I
said
had literally no sleep.
you went into margin and had to pay that, like you have to actually pay more than's in your account.
Yeah, because I only deposited 10,000, and I went negative.
Dude, also
I
the
went in.
fees
I
as
went into
well.
margin, so yeah, you have to pay the fees, and you have to
The
pay.
fees are insane sometimes.
Yeah. And you
What
have to pay
happens?
the margin. Huh?
Don't they just liquidate your like? Did you do cross or isolated?
Isolated. It's margin.
But don't
Oh,
they
no, it
just
was on cross.
liquidate the funds
No,
in
it's
your?
not. It's not a cash account. Yeah, you lose it, and then you lose all that you had, and you go into margin.
Oh shit!
That's why I said that's why if you're a margin trader, right? If you're a margin trader, you better know what you're doing, because if you start going into margin, you're gonna have to pay that back. That's why a lot of people consider using a cash account, but the downside of a cash account is you're only limited to the amount of cash that you have, right? Because even when you get to 25K on an options account and you're still on a cash account, you're still limited to the amount of money that you have until you switch to margin. Oh my god, why am I watching this Bitcoin drop right now? That is sad. Fuck. It's only sad because I have an actual Bitcoin, and just knowing that it's losing value. But yeah, if you go into margin, you're gonna have to pay that back. Just always keep that in mind. If you have a cash account, you're not scared of going, and you're not scared of margin, go to margin because you will have unlimited day trades. Just make sure you do not go into margin because you will get fucked. And that happened to me on Bitcoin, and that was rough. I had to pay it back.
Dude, if I lose 25K and go into margins, something is wrong already with me.
Yeah, that's why I say like stick with cash accounts for now, and then once everything starts clicking and you're able to stay consistent and you're consistently building a buffer, then by all means switch to margin, and then until you get back down to that threshold, let's say I don't know 30,000. If you go under 30,000, go back to a cash account so you don't go into margin.
Yeah.
But I don't know. That's my 2 cents with cash and margin accounts. I like margin just because you have unlimited day trades. And if I really want to take a big position, I can, as long as I am right, hopefully.
Yeah, but aren't you only sizing like 1 to 3% per trade anyway? So like, how would you need more than that for? Like, why would you need unlimited?
I don't use my whole entire portfolio, but I don't know. Maybe there's a day. I mean, back then at least. Sorry, back then for me, I was using a lot more of my cash because I was using the whole 100,000 that I had back then. I had to use a little bit of. I needed to go into margin because I needed. Sorry, I didn't need to go into margin, but I needed a margin account so I can keep using the cash that I had. It's not that I needed to use margin, but I needed the idea of being able to use unlimited day trades because I was going past. I was using the amount of money that I had with my account back then. Like I said, back then I was using my whole entire port. Like if I was 100,000, 500,000, I was using all of it.
In one trade?
No, not one trade, but I was using all of it. Hell no. I think the biggest I've ever been in a position, I probably had like a little over 200,000 on a trade, and that's
Holy
kind of it. but
Shit
that's
was
it.
recently.
Yo, chillax.
Holy
my,
shit.
My FOMC trade, I had a little over 200,000 on puts, and that shit banked.
Bro, that's like what? 10,000 contracts?
It was spread out. I didn't have it all in one. I had like 7 different sets of puts for FOMC.
Oh, and then
I had like 7 different sets of puts, and it was a little over $200,000 worth of puts. And
No,
yeah,
that's
FOMC
crazy,
came
bro.
out. I closed all of that shit. That shit was fucking nasty. Oh yeah,
Bro,
that
I'm
was,
like sweat. My palms are sweating when I'm doing like 10,000.
Yeah, hold on. I want to see. When did I tell you guys that? Hold on, let me see. Divergence then. I said I want to close. Right, I said that, right? Fuck, I gotta find that message. Fuck. When did I say that? What did I say?
it was in October. You talking about last FOMC when you had that crazy ass fucking 3 mil month?
Yeah.
Yeah. That shit was crazy.
When did I say? I said it in our chat saying I want to close my puts. What day was that? What time? What day was FOMC? Shit.
I have no idea. I think it was towards the end of the month.
I don't know either, man.
I think it was towards
I
the
just
end
want
of
to see. I want to see my message. That's what I want to see.
I think it was the last Wednesday or the second to last Wednesday of October.
What the fuck? Oh shit. In trading chat. I want to find that message now. It's gonna bother me.
October 29.
October 29.
Yeah.
Thank you.
You gotta scroll past all Braden's profit posts.
I just remember I was fucking sweating, bro. I found all my messages. Oh shit. Damn, I put it all in capital.
Yeah.
Oh yeah, see, so I said at 10:29 10:29 I said I have 4 so keep in mind I said I have 4 sets of puts, but that's on top of the ones I had posted already. So I had so I guess it was 6, not 7, sorry. I had 2 sets of puts that I grabbed that I posted, and I had another 4 sets of puts. And I said everything is green, but I feel like I need to close them all. And then I fucking yeah. Good fucking times. Holy shit.
Bro, I told literally everyone in my family about that.
Yeah, wait, hold up. For the people that don't see that message, this is literally what I fucking said, bro. Look at this shit.
Fuck you.
Oh my god. That was such a crazy day. No, yeah, dude. I fucking went in voice chat. I'm like, please someone tell me they caught the puts too. Oh my god, that was so crazy. That was such a crazy day. That day was fucking man, that was a nice day. I was so dude, you know, I was red on that trade. I think I was down like 17,000 at most. And it was just chopping. I'm like, bro, it's gonna fucking drop. And I remember I was up like 4,000 on everything, and that's when I said I think I need to. I want to wait. Hold up. Actually, there's still proof of that. Where is that? Yeah. See, even see, I even said it here. So keep in mind, I had the 2 sets of puts that I already had, and then on top of that, the ones that I posted, and then I had another 4 sets of puts. I said everything green, but I need to close. I feel like I need to close them all. And then the fucking drop happened.
That was insane, dude.
That was a fucking great ass day. Risked a little over 200,000, made a little over 1.2 mil on that trade. That was fucking nuts.
Yeah.
That honestly, this FOMC, that is my biggest trading day ever. I've never ever made like a mil in one day. I think the biggest before that, I think I made a little over 600,000, but that was my
Was that
biggest
NFP?
trading.
Dude, that month you probably made more money than Steph Curry,
Tom Brady.
which is fucking nuts.
More than Steph Curry, bro.
No,
What, he's on like what, a $40 million contract a year?
yeah, at least that's guaranteed.
Yeah, but
But
that's
he also
basically,
has his sponsors.
yeah, I
He
was
does
just
have
talking about his contract.
But yeah, I mean, I don't do that every day. By all means, I do not spend 200,000 every day. Yeah,
So full port next FOMC is what you're
No.
telling me.
no.
Bro.
I'm taking a loan out on the house right now.
Me too as
Well,
well.
we got to knock on wood. We haven't taken a loss on any FOMCs for the past 2 years. Knock on wood.
No, dead ass. How is that even possible?
I don't know, but it's been happening. Literally, you could go historically to every single FOMC that we've had. Look at my channel and go back to those days. I promise you, I have not taken any L's on FOMC or CPI or NFP.
Oh yeah. Since I've been here, dude, literally every time it's FOMC or something, just all caps. Close it all. Close it all. Holy fucking shit.
Yeah, not good. Next FOMC is coming up. Gotta see what happens. I think this one's gonna be a little bit scary because we have a lot of backed up data. So I'm a little curious what's gonna happen. And then December 1st, we get our first cuts. I don't know. It is a bullish. I mean, interest getting cuts on the first is bullish, but with everything else that's backed up, is it bullish? I don't know.
I guess depends if you ask Bonk or not.
Wait, there's FOMC tomorrow, right? FOMC minute.
Just the notes.
Holy fuck!
Yo,
Yep.
What up, Aiden?
what are y'all doing?
We had a little session. We were talking about trading today and everything we took, and yeah, pretty much it.
Nice,
We kind of
nice.
came towards the tail end.
We just got off.
Sweet. Dude, I saw you are now a 5-second trader. I'm happy to try that out tomorrow.
Yo, you want to know something crazy? I mean, that was just a joke because the market was just like, dude. If you saw this morning, we were stuck in a range of 100 points and was so fucking volatile. I was like, how the fuck are we supposed to trade this? And that's when I like just made a joke. I'm like, oh, let's try the 5-second. So I put the 1 minute, a 45-second, and a 5-second chart, and I was just joking around. And I'm like, oh yeah, see, this is the bullish divergence, and it broke it. This is where he's short, and it fucking played out and went like it played towards my 1 minute RSI levels, which was fucking weird.
Bro.
And then it ended up bouncing. I'm like, all right, this is just a troll. Like I don't fully believe in this, but it's kind of weird that it kind of played out. Well, yeah, that was just a joke, but for some weird reason, that shit fucking worked.
Yeah, no,
was weird.
that's pretty funny though. I mean, it kind of makes sense, but at the same time, it's pretty funny.
Yeah,
But I did see that range, dude. I saw you cut the
100 fucking
puts.
points.
That range was pretty fucking huge.
Yeah, when it finally broke, that fucking dump played out nasty. I was gonna be on voice chat earlier today, but I got kind of annoyed, to be honest. I had like
Yeah,
7
who's in this
people.
VC?
I had 7 people on TT fucking message me. It's no one in here, but I had like 7
Okay.
people message
Oh,
me. I'm
yeah.
like, bro.
Oh, of course it's no one in here, dude.
I was
They-
gonna see some like girl, Lily. I don't know if it was one of them, but like she was in the premium, dude. She was like, I lost half of my day trading, like
Oh,
day
funny.
trading funds.
Cause she
And
messaged me too.
I was in VC, and I was like, yo, like first of all, if you're following him, follow him. You would have been green. And then second of all, I was like, dude, you should not be losing under like any circumstance. You should not be in a position where you losing 40%, being down 40% equals losing half of your port.
Bro,
And then
I even I said it
that's
multiple
just
times
insane.
too, like trim level, trim level, trim level. Like I trimmed the position already. Because I know exactly which trade it was. It was my SPY and SPX call. I took a SPY call. I got to trim it. Came back down to my break even. I said, if you want to risk it, this is where you can enter. Because I ended up going red on them. And then that entry would have been green if people got in. And then I took SPX calls. And then it bounced all the way back up. I said, trim level again. If you took SPY calls, trim level again. I don't know how many times I could have said it. And I said, if it breaks this, I'm going to catch the short. I caught the short. And then I didn't get to close my calls because it happened so quick. And then it fucking bounced all the way back up. And then next thing you know, fucking that whole position anyways, that SPY and SPX call ended up going 100%. I mean, I didn't get to hold it for 100%, but ended up working. You know? But then again, like I said, like
Yeah.
if so what Braden's saying now too. So if you get stopped on an option trade, like sure, like if you take a trade and it ends up going towards a trim level that I've said multiple times, right? And if you want to say like, if you don't want to go red, why wouldn't you put your stop? If I said like it's risky and I'm gonna catch this drop, right? Why would you hold on to a call
Yeah.
if I'm saying that I'm gonna catch this drop and you're gonna hold through a drop, right? I literally said like it needs to hold this level, and I said multiple times that it's back at the fucking trim level. Multiple times. I said it like 2 or 3 times. That it's literally back at the trim level. If you grab the spy calls, when I said like you can grab them because I was red, you're literally back at green. Like it's up. There's no reason why. Even if you did trim, like right, let's say you trimmed that position when I said, and you held on to it, and it went red, bro. That position would have never even wiped out 40% of your portfolio. There's no way, unless you never even trimmed.
That's the most
Right.
baffling part, bro. That's
holy
like,
fuck.
I'm just like, dude, how do you lose?
Bro, I got
Yeah.
there was a person, I'm not gonna say his name, but he fucking spammed the living shit out of my DMs. I was like, bro. And then that's literally when I made that message in my channel. I'm like, dude, I'm not gonna hop on voice chat because I saw that person in voice chat. I'm like, I'm not going in there.
Oh boy.
I just kept trading, and holy fuck, the market was just amazing. The market was just fucking great. I caught IWM
I
after
fucking
that. Fucking
yeah.
got QQQ, got SPY. Holy shit, this market was just fucking
Oh, wait,
great.
on Monday?
No, today.
Oh, today, I mean?
I'm talking about
Monday
today.
and today.
Oh yeah, Monday was
crazy.
great. Yesterday was great too.
I
Yo,
was
I
saying,
did not.
dude, like
Yo,
the
that's
price
so
action
crazy.
today.
I did not. Yo, we literally said yesterday. I hope the price action is the same going into tomorrow.
Yeah, dude.
Holy shit, they did not fucking disappoint.
I hope it's like this the whole week, bro. If it's like this the whole week, it's gonna be like one of my best weeks ever.
Dude, it's
Fuck,
crazy.
dude.
But yeah, dude, I just got pissed off this morning. It's like I said, like
Yeah.
I don't mind when it's other servers because I just leave them. I don't give a fuck. I can care less about what the servers are paying me. I just leave the server. I don't care. If I get spammed by like 10 people from that server, I just leave. There's no point in me having it. I don't have anything to prove to those people. I don't care. I just leave. But when it's my own server, all right. I just
You're like,
I don't know what I
"Fuck."
could do. I'm like, fuck, I'm not gonna leave TC. It's like I'm just not gonna hop in voice chat. I'm just gonna
I
be
don't know,
trading.
bro.
Like I don't know what I could do. So I just ended up trading by myself the whole time, and I mean, shit, the market was great. So I mean, that just shows like people's risk management is just is still in the degeneracy. You know, like people were
That's
holding.
literally like I wanted to get that point across to her. Like I didn't even want to seem like I was getting mad. I was like, dude, risk management is like above all. Like me and Adrian were kind of like poking at it. We were like, first of all, the IV today is like I think today QQQ was like
45.
for
That's why I
SPX.
even said
Yeah,
it. That's why I even said at the open. I noticed that the IV was like fucking juiced. I was like, holy shit! And the cons are expensive. So that's why I said I'm gonna trade a little bit smaller today because of that sole reason. The
exactly.
shit was
Yeah,
expensive. IV was a lot higher. I'm like, oh, all right. Well, maybe it's not today's the day to trade a little bit smaller. And I posted that for a reason because of I didn't think it was gonna be this volatile, but I mean just because of that
Bro,
reason.
those
because
candles
of
this
IV.
morning though.
yeah, dude. This morning. I got pretty fucking sketched out. I had a green
Yeah,
day.
I
It
got-
almost was a really red day though.
Dude, I got freaking touched right at the open, bro.
Yeah, dude. Same.
I didn't realize like because I was just trading my usual sizing, and I didn't realize how volatile the open was this morning. It was moving up and down like 80 points.
You know, for the opens, I really, 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 really try not to look at my P&L. So when I took my trade, I knew it was a little bit because I remember it bounced, and I knew it was red,
Yeah.
but I do not look.
Dude, that's where I got
try not to
fucked.
look because I trade heavy for my opens, and if I look at my P&L, I'm probably fucking psyched the fuck out. And good thing I
Yeah.
didn't look because it ended up fucking going back down, and then it did the full move, and I gotta fucking follow my
Yeah, no.
my plan
I-
that I wanted to trim for it. But yeah, I try not to look at my
So-
P&L for my first trade because, like I said, that's where I trade my heaviest, and if I look at my P&L, I'm fucking psyching myself out. When I look, by the way, if I take a first trade and I have to average down, just know I'm fucking red as fuck.
Yeah.
I
Yeah,
literally told
dude.
everyone if I
No,
have to
that's, like,
average
the
down on my
hardest,
first
like-
trade, I am really, really red. And just know, like, if you're red, I'm in a lot more pain than you are because I trade
Yeah.
very heavy for my open.
I averaged down on open
Like, I need
because
my
I
average
was
down perfect.
yeah, bro. I came out green,
Yeah,
but
today was great.
I did average down today,
Oh, for the
and it was
open?
almost a very
Oh,
because
shit.
we like bounced all the way up to 15-minute trauma, and like
Oh,
we were up
I see,
there.
I see. Yeah, I waited for that first 5 minute because I waited. I was like, it looks bearish, but I don't know why. Like right off the rip, it opened. Right at the
It
open,
looks
just
so
ripped.
bearish, dude.
Yeah,
Yeah.
it looked bearish right off the setup, but then the 5 minute rejected off of that. I had a level. I don't know if it was it trauma.
On the 15-minute, I think it was. I think that it was either 15 or 5.
No. It was probably 5, but it rejected off of this level I had for it, and then that's when I decided to take the put. I waited 5 minutes to grab my put, but even when I grabbed my put, it still wasn't right. Like it still went red, still went a little red. I'm like, bro, what the fuck is going on? Where's my drop? And then 5 minutes later, it fucking dropped.
Dude, that's what freaking like even with like relatively small positions on futures, it moves your account so fast, bro. I swear. Especially with like
especially
an aggressive
today, bro,
opening,
holy
like today,
fuck.
bro. Like that's like why I got fucked this morning, bro. Because like usually I never moves that fast in the morning. It still moves fast, but like not that fast.
Yeah. Shit, Pure Trade Futures today. Fuck, your account was moving.
Yeah.
Your shit's gone.
No, I recovered. I recovered like for that following the later trades.
I think
Yeah.
So that's why I was
tomorrow.
like, go ahead.
I think tomorrow, just kind of based off the markets moving, I might size like somewhat lighter because the moves we've been getting are like the actual moves. So I think I can like size somewhat smaller and still get like a nice chunk of change.
Yeah, at the
you know
end of the
what I mean?
day, literally just look at how much you made the past 2 days, and literally use a portion of it. Like you don't like if you made your
Yeah.
money for the past 2 days going into tomorrow, just use a portion of what you've made because that's what you're risking, and then and then once you make profit off of that, maybe you can start using the rest of it. You know, I mean that's kind of the idea that I kind of have in mind, because this is kind of why most of the times I take Fridays off, is because I make most of my money Monday, Tuesday, and Wednesday, and then Thursday's the day I kind of like trade a lot smaller because I'm just using the rest of the profit that I had from the previous couple days, and then I just take Friday off. Oh, at least that's what I've been doing for the past 2 months. But that's kind of what I've been doing. You know, I just going into like Thursday, I just use the profit that I made Monday, Tuesday, Wednesday, and there's no point in me having to size up, and I kind of just go off
Yeah, that
of
makes
that.
sense.
And then if I do want to trade Friday, then I could just use the profit that I made from Monday, Tuesday, Wednesday
Thursday,
again,
yeah.
or just use all of Thursday. You know?
Yeah.
Yeah, that's kind of what my idea is. At least that's what's been working for me. I don't know, I guess it could be different for someone else, but well,
Yeah.
Nasdaq has done
All right.
fucking jack shit for me.
I'm gonna head out. Catch y'all boys tomorrow.
Sounds good, man.
Same. Y'all be easy. Appreciate you, Bear.
Yep, sir.
Yo, Bear, you said employment numbers come tomorrow. It's on Thursday.
Is that? Wait, what's tomorrow then? Oh, tomorrow's Nvidia.
Yeah.
Nvidia is
Oh, I'm
after.
sorry. Yeah, after hours.
So
Sorry, then it is Thursday.
so tomorrow is going to be complete stalemate day. People waiting for numbers on
Nvidia?
Nvidia.
Maybe.
It's not usually how it is.
Or maybe people are
honestly.
just, or maybe people write up Nvidia and it creates a little bit of volatility. I don't know. We'll see.
Yeah, it just depends on where it's at.
Mhm.
Oh. Right.
Yeah, no, I got cooked off first trade this morning only because of how volatile it was. If I still held the
Yeah.
trade, I would have been up like
Fucking
way more,
big.
but still, it's fine. Don't gotta worry about it. 'Cause other trades that I took were fine.